Today's episode is brought to you by Security Financial Management.
Ooh, welcome back to Best Advice Podcast, guys. I'm your host, Rob Lovaglio, here as always with Austin Fatz Jacks, and joining us today for the first time, Security Financial Management's partner and Chief Operating Officer, Mr. Keith Moore. Keith, what's up, baby?
Oh, cue the foreigner.
Feels like the first time. Feels like the very first time.
Love it.
Nice, Keith.
Dang.
Keith in with the jokes.
We like to start each episode with the powerful practice of positive thinking. We like to call this, give me something good. So, Fatz, give me something good.
Hey, give me something good.
I don't know if it's good, but I put on a good 5 pounds this weekend from Thanksgiving.
Once you've had fat, you never go back.
I think we all did.
Yeah, I had a good time and ate a lot of good food, so there's your something good, Rob.
This is a good 5 pounds.
Yeah.
Man. I think I got at least 7 in me this week.
I'm dead sexy.
Let's get to the question of the day. Today's question comes from Carter from Winter Springs. Carter, what you got for us?
You want to say something?
Okay, guys, Carter's question is, I just got a year-end bonus, and it pushed me into a higher tax bracket. I've heard wealthy individuals lower their taxable income to drop into a lower bracket. Is that true? And are there strategies I can use before year-end to do the same?
Good question, Carter. I think Fatz just went through something similar. I don't know if it's the exact same thing with one of your clients' daughters recently. So
Yeah.
why don't you take this over?
So basically the concept is tax bracket management, right? For sake of discussion, not the girl's name, but let's call her Emily. Mm-hmm. Emily had a base salary of $111,600. So basically standard deduction factored in reduces her taxable income to $97,000. So Emily got a $10,000 bonus. That bonus bumps her up into the next tax bracket of 24%. So anything above $100,525, her taxable income or the taxes that she pays on that is going to be 24%.
Yeah, so the $107,000, like Austin mentioned, it brings her into the 24% tax bracket. So, obviously the idea is to get her down to back to the 22% tax bracket, because she really can't go below 22%, because that next level is like $47,000, below $47,000.
So Emily said, hey, how can I reduce my taxable income to bump me back down in that 22% bracket? And the way she could do that is through a 401k contribution.
Yeah, so for that 401k contribution, as Austin mentioned, reduces her income by $10,000, which puts her down in that 22% tax bracket, which is, obviously that was the goal, is to get her tax bracket down to the 22% range.
Yes. And by doing so, it's, not only are you saving some money in taxes, but it's investing in your future. You're not losing access to that money. Granted, it's not super liquid without penalty until she's age 60, but it's a way for her to save for retirement, also reduce the amount that she'll pay this year in taxes. Because any contributions made to a pre-tax or tax-deferred portion of your 401k reduces your taxable income, and that was her goal for this circumstance.
And by making that $10,000 contribution, she gets to invest all of that $10,000 versus after tax, $7,800 after tax at a 22% tax bracket. So she gets the full advantage of that $10,000 growing over, so many years, and really, growing her wealth.
So she got the tax advantage of the investment and then the tax advantage of the yearly income.
That's right.
Right? It's a double dose, baby.
Double dip.
Double dip. Big double dipper.
Did you just double dipped? What are you talking about? From now on, just take one dip and end it.
So yeah, you see all these, what we think are multi-millionaires. I don't know if they are or not, but on TV, and people complain about, he didn't pay any taxes. He made $10 million but didn't pay any taxes. Yeah. Is that like the same sort of strategy here?
This is a much simpler strategy. There are more involved strategies to reduce your taxes. Mm-hmm. I mean, a lot of people at that level don't take the standard deduction. They itemize their deductions through, real estate. There's oil and gas drilling programs that
business expenses.
Yeah, business expenses. So there's more complex tax reduction strategies. This is just simple term tax bracket management. How can we get you from a higher tax bracket and bring you back to the one below, and it's simple. 401k contribution, the max amount for this year for people under 50 is $23,000. So that's just $23,000 that you could use to kind of get you into that lower bracket. So there are more complex strategies, but this is kind of an easy, simple strategy that's also, we encourage people to do it just for retirement savings. So not only are you reducing your taxable income, but you're also saving for your retirement.
And that's something we do for all of our clients. We look at their individual tax situation, see what they can take advantage of as far as itemized deductions and so forth. Obviously, we're working with a licensed CPA, whether it's one that they have brought to us and we partner with them to work with them, or if they don't have one, we can refer them to a CPA. So
amazing. Hope that helps, Carter. Remember, folks, the secret to wealth is not what you earn, it's what you keep. Happy days, everybody.
So as you know, many clients have a lot of questions like that. So as things get complicated, you have questions regarding investments, tax saving strategies, please feel free to reach out to any of the advisors at Security Financial. We'd be happy to have a discussion with them, see if we could be a good fit and help them.
This podcast is for entertainment and educational purposes only and is not intended as personal financial advice. Before making any financial decision, please do your own research and consult a financial advisor as needed. If you have a question for the guys, email podcast@bestadvicepodcastguys.com.